Please use operational performance measurements, not just financial ones, during your weekly, monthly, even yearly performance reviews. Hello, I'm Tom. Welcome to my channel. We'll talk about continuous improvement in an industrial setting. And today's video, well, yes, of course, CI Manager, it is for you, but this video honestly is even more for the operations managers, the people in finance, maybe even the CEOs out there. And it is because when you do your performance review, like most companies have, for instance, a monthly review of results, and then it is a variation review versus the budget. Well, this is a great thing. Keep doing that. But what I very often see companies do is make that a fully financial review. So we see things like, okay, we've got a volume, and in our example, we stayed 100 tons below volume. Probably a bad thing. You might even see that it was the sales volume expressed in dollars, so to say. So it could also be that we stayed under there $100,000. And then it goes into sort of operational categories, but these are actually P&L lines. So these are the things that the company and that it uses to check, where did we spend money, where did we get money, but especially where did we spend money. So on materials, we overspent by 500,000. On labor, we overspent by 50,000. So we almost reached the budget, basically, right? On energy, we underspent by 300,000. Very nice. So you see these costs are red when they're higher. These costs are green when they're lower. The positive side, in this case, the volume is red one lower. And this is a pretty good thing to do on a monthly basis. The problem, however, is that these are not operational indicators. So when we look at this, this is what sort of the shareholders of the company definitely want to know. Well, maybe one layer under the shareholders, like CEO level, finance departments, they need to know where the variations, where the variances versus budget went to. And this is a good split. But what we need operations managers to be able to handle is a more operational way of looking at these KPIs. So when we see material costs have increased, well, yes, versus the budgeted material expenses, but that doesn't tell me why. So you want to break this up further, and credit to those managerial accountants, those finance people, controllers who already do this. But things like if the volume apparently was lower, and the material cost was higher, that's a double whammy, right? We want to know material cost per production volume. So many finance people already take those volume effects out of these variations and put it in a specific volume price effect. But here we see, well, we don't really know yet. Also, have we perhaps been producing different products than budgeted? Right? Most companies have a product mix. So I want to know, for those products that we made, did we overuse or not? Is it because we have been pushing more materials onto the shop floor, and like many big companies do, we calculate how much materials went in, not really looking at how much product came out, but how much went in this month. So if you have a month where you're sort of building up stocks, then your material component can be very high. Because you haven't sold them yet, you're not getting into a lot of finance here, but such effects, right? Now, what we want to know is, for those products that I made, what was my waste percentage? What was my rework percentage? My giveaway, right? The overusage percentage. Those are operational material performance indicators. And for volume, and definitely for our friend labor here, we also have the one that you've been seeing in very recent videos. But if you're not watching this in the beginning of September, then, maybe to you it's a completely random other video. We want to look at operational indicators like an OE. And let's take that one because I think it explains best the link between finance and operational performance. So we get ourselves a nice OE bar, and we have a good percentage of effective production, right? So we have, and that is immediately the OE percentage, but we have a percentage, a number of hours of effective production time. But then we also have a whole bunch of waste, right? So here we have the good stuff, value added. And then after that, we get a whole bunch of wastes. So these wastes, what are they? And some of them may have been expected, and some of them will not be expected. So things that we will see there. The availability wastes, like plant maintenance, like setup time, like breakdowns. We see them. Did we do more plant maintenance than was expected? Or was this maybe that August period where we know, and we sort of budgeted, that we would be down for 2 weeks? Well, if you have a very poor OEE in August because you spend at least half of your time being in a planned maintenance, that's okay, right? That is a planned thing. But if you were, sort of aiming at having about 4% of breakdowns because you know that that's roughly what this machine has throughout, recent months or years, so roughly that 4% level, but last month had a 12% breakdown level. Now, that is a big problem. That explains why we didn't have the volume. It will also explain why we have too much labor. Where did it go? These are already good explanations. We add in things like line speed, quality. So maybe we have been throwing away quite a number of our products because of defects during manufacturing. Oh, so that's why we have a very high material usage per ton of good product. Things like these. If we see that actually quality losses are pretty low and we're still using too much material, then it's not a defect thing, then it's material usage, a yield problem. We dive into that further. By the way, for a good material analysis, we need a material balance, different way, but again, the same principle, right? So there you also have at least 5 categories of material loss that you want to put into your operational performance overview. Now, the next thing, and this is what we've been talking about in a live workshop just a little while ago, and what we will be also going over in a very nice capacity and labor challenge. If you're interested in getting either yourself or somebody in your team to really do this for your factory, do let me know. Sign up for that challenge. Really, really good for your business, especially in budgeting time. And what we'll do there is we'll say, well, how much labor do we actually need? So say we have 3 people on the line, but if we take all the hours that we use the line, and this year I was like, that doesn't cover all of our labor. In fact, we used more labor. On average, we used, for instance, 5.5. If we use an average of 5.5, then we're using almost twice as much labor as that we have at the line. Why is that? Well, that is because we have absenteeism. We have maybe administration, admin type of jobs. We have what have you, right? So that way we put into a picture what is the effective machine time, the non-effective machine time, the sort of net direct labor spend, and the actual direct labor spend. And we get a picture that will generate a really good discussion piece for us next to these. So I'm not saying get rid of your financial indicators that you do your variance analysis towards every month, but under those, make these. And really a message to the controllers, the financial people watching, you love this, and for good reason. Make these links. So during the budget season, you do all kinds of assumptions together with your operational managers. Keep doing those same assumptions and check the assumptions every month as well. So you don't change the budget assumptions, but those same assumptions were, well, we'll be making so much volume that we'll be doing on those lines that have this OEE, so many losses, so many people on the line, but we also need to have that supervisor, that extra person for cleaning, and they make sort of the assumptions that form this overview. Every month you check whether or not these ratios are still in line. And then you can challenge your operation on those ratios. So you may have had a very nice month, good volumes, but why were your breakdowns so high? What happened there? Or you had a pretty good month, but the labor spent was high. What happened? Which of these categories was our labor waster? Now, if that was vacation, because we're again talking August, probably not a problem at all. But if there was suddenly a whole bunch of people were handling rework or were in some sort of project, or just the mixing of volumes that we put, the products that we put on the line meant that half of the time people were just there, not really for a job, then we have things that we can improve, even if the total labor budget was okay versus budget. Now, as I said, the same will also happen when we're looking at material cost, a bit when we're looking at energy, and that is what I also really want to have are percentages. So I want a percentage of waste or a percentage of rework, because I do not really care for the absolute waste numbers. If we have a bit more production, a bit less production, if what are we sort of dividing it by? What are we checking? I just want to know what went into a machine, what came out of a machine, and preferably at that level, so not what went into the factory and what came out of the factory, because you know that there is a lot of stock balancing in there. So unless you can really keep that stock into your books and account for it properly, your numbers are going to go up and down every month. Make these into operational numbers. What do we see? What can our shop floor managers, what can our production teams really do something about? Those are these. And the good thing is, if you do this is also full of percentages, or these type of analyses, and you have this data available, this same picture can be made every day, every week, every month, and the picture will stay roughly the same, because these ratios will stay roughly the same, or at least you expect them to stay the same. Of course, if we had that plant maintenance month with 2 weeks there in August, you will see a difference, but then at least you know why. But the ideas, the concepts will be very relatable. So that means that your operators, your shift leaders, your quality manager, day in, day out, they will speak about roughly the same percentages and the same type of numbers that you can do on a monthly level. And to them, it doesn't really say much if at the end of the month you are 500,000 over your material budget. By the way, this is a monthly deviation. We're talking about a huge company, but the financial number doesn't really give that insight, not that feeling. So, long talk about one point, but I just hope you pick it up and hope you implement it. Do your budget variance reports based on the assumptions underlying the budget, because those are the operational performance indicators, and those can drive your operational excellence. These are just the result coming out of it. Now, if you like that, do check out my challenge, a training and implementation at the same time for this capacity and labor setup. We don't go into material in that one, but really, really important to do for any company. Now you have a good chance to do it together with me, immediately implement it and learn and implement together, and you will get that setup with the basis of what you can then use in your monthly variance report. You get it for your own company because you will be the one doing it. Or perhaps you want to do this together with a number of people from your factory. One of the things, and if this is important for you, that I will also offer is free is sort of the maximum. If you have more than 3 people from your team, from your factory, your company that want to join, you just pay free, and I will make sure the rest get their access as well. That's a little thing for watching this video, but do check that out. I hope you liked this video. Hit the like button if you did. Any questions down in the comments below, and I wish you a lot of joy on your continuous improvement journey.